So this is just a video lesson on the effects of a stock split. In this case, it happens to be a forward split, but also reverse split. So Apple says they're going to split it 1 for 4. So technically, I think at the end of the month or something like that. So technically, if you buy this stock, let's say it was the 28th of August today, and you buy Apple, you're going to be buying Apple at $452 a share. If you bought it on assuming the 29, 30, and 31 are business days, let's just assume it is. If you buy it on the 29th, you're going to be paying, let me just think about this for a sec. Yeah, if you bought it on the 29th, if it goes effective on the 1st or on the 31st, this should show up as a stock that's trading at 120, whatever 451 is divided by 4, 112.75. If it goes effective on the, well, actually the effective date will be the day that trades at 112.75. So up until that day, you'll be paying $450 for it. The effective day, you'll be trading technically, or just it could change. Now I'm going to talk about that in a second. It'll technically trade at 112.75 if it closes at 451 on that day. The day before, the next day it opens. So they split it 4 times. So in your account, you'll have a stock that is a quarter of the price, but you'll have 4 times as much stock. So in effect, you've got exactly the same thing. Historically, when you split a stock, which they don't do as much anymore, but they used to do it all the time. They don't as much anymore because it's very expensive to do for companies. And just one second. So historically, or nowadays, it's very expensive to split a stock. There's a lot of things that have to happen. So the companies tend not to do it. And the other thing also that happens is that most of the buying of these high-priced stocks are done by institutions and not by individuals. So if you've got a billion or 10 billion or 100 billion under management, it's nothing for you to buy a million shares at, $450. If you've got 100 billion, that's nothing. So, it's 0.5% of your portfolio. So stocks generally haven't been split. In the olden days, when stocks got up to around 100, they would normally split them 4 or 5 to 1 to get them back down into the $25 range, 10 to 25 range, because then that allowed retail investors to buy the stock. Not very many retail investors looking to buy stocks, that are trading 2,500. If they do, they buy 1 share, or, it's very difficult for them to trade them. So in the olden days, they used to split it so that the stock would trade around 10 to 25. Now, typically, when you forward split a stock, a 1 for 4, for 1 old, you get 4 new. Let's say Apple was trading at $400 because that's a nice, easy, round number. Technically, you should see the stock trade at $100 if it was trading at 400. A 1 for 4 would take it to 400. Take it 100 from 400. What normally happens, though, is that the stock split is seen as a positive move by the company, and the price will actually increase, not decrease. So even though you wake up Monday morning with 4 times as much stock, your market cap might even actually be bigger, because typically on a forward split, stocks trade higher after the split for that day. Now, whether it continues, we'll see the trend if it pops out of this wedge and the way it goes. The thing is, it would just be different numbers, that's all. Instead of 400, it'd be 100. Generally, it's positive for stocks to split. The thing about stock splitting, though, quite often it corresponds with the tops of markets, because stocks get up so high, then they split them. takes them back to a level that other people can buy them. But you typically see that occurring near the tops of markets. So Apple, I mean, this is a strong rising channel. I would expect the stock to continue to trade higher and on a split basis. But, you got to remember where this came from. 200, it's doubled in 6 months, in less than 6 months. So, where's the top? I don't know. But a split is positive. On the flip side of that, I don't know if I'm just trying to, maybe somebody's got a symbol for me for a stock that was recently rolled back. What was it? Did IGC get rolled back? No. Here's a stock that's been rolled back. XSPCA twice. One for 20 and one for 3. Just recently. Rolled back here. So what happened in the past is irrelevant because the prices have all changed. In the olden days, when you split a stock, that was usually very negative. You had a stock that was trading at, in this case, 1 for 3 was trading at 12, let's say 10, and it should have opened at 250. Or sorry, 1 for 3 at 10, so it should open at 333. But instead, it's a tight stock. The traders get a hold of it, the day traders, and they run it up for no particular reason other than it's a thin traded stock now, or low volume. Thin traded. There's not much stock outstanding, so they can. So a lot of buyers can influence the price quite easily, and it pops up, and then everybody sells. And in this case, it has backed off. Quite often, they try to time the reverse split with news so that the market does go up with it. Companies, because historically a reverse split has been a negative position for stocks, and you would see them sell off. Normally, if you had a stock at 4, you would expect, and it was or at 3, let's say, and you had a 1 for 3, you would expect it to open at $1, but in reality, they would open at 75 cents, 60 cents, because they knew that they were splitting them for a reason. One is that they needed money. And so they reverse split the stock to reduce the capitalization so that they can issue more stock to raise capital. And so normally it was a negative position. Nowadays, with Robinhood traders taking millions of shares, and with a view that some of the momentum chat rooms get a hold of the stuff and run it up, you don't get that same thing. But eventually, it does work its way out. The best example of this is the UVXY. This came from 2 million. This is designed. Came from 1.6 million. You can see all the reverse splits on it. This is designed to go lower, to go to 0. And so they have to keep reverse splitting it because it runs out of value, especially in a bull market. And this is typically what happens. It just sells off as you split stocks. So that's my theory on Apple.